Greetings all, Ben here from East West. So I just thought I'd have a real quick look at some of these uranium stocks and just how some of the candles and volume sort of warned us that there might be a short-term top in place. So you can see here we got a shooting star on falling volume after this pump, and then we've got this undecided doji on less volume, and then we've got a bit of a sell-off today. So, you know, that would just suggest that, you know, obviously the buying's run out of steam, and you know, that people are just taking profit or bailing out a bit. So just in the short term, then I'd expect that this gap should get filled, and then I'd be looking at the 50% retracement off this low to the high, which sort of sits right at this old resistance level. So now we want to see if this will come down and provide support before we continue on. I think we do have another leg higher, but I'm expecting some sideways action in the short term. So, of course, I don't have a crystal ball, but I would just expect that the market's now going to start chopping while it builds a base before it has another run. Energy fuels, that the candles aren't quite as telling, but we did have this sort of, it's almost a hanging man, but obviously it's just followed down the rest of the market today. So just in terms of what I would think we'll be looking for next, I mean, you've got this area of resistance that we broke through, so now it's just a matter of whether or not the market can come back. So it's that $7.62 area, represents about 50%. Just depends if the market can come back. It may not, it may only get back this far. If it's going to do some sort of wave 4 action, remains to be seen. But that would be the sort of area that I'd be looking for between $7.36 and $7.62 as the next test of price to see if it's going to hold up. Just looking at Cameco, same sort of thing. We had a shooting star candle here on the biggest volume. Then we've had this indecisive doji candle, which is almost a hanging man, and then we've come off today. So just very basically, the 50% would take us right to the bottom of this sort of congestion zone here. But, you know, the shooting star has taken it up a fair way. So that once again would be the sort of area that I'd be looking for, something down there at the lowest. I wouldn't want to see it come down any lower. So what's that, $37.80, $36.60. But once again, I'd be thinking about some sort of choppy sideways action for, I don't know how long it's going to go on for. It may not be long at all. We might ricochet straight back up tomorrow and continue on. We've got the Fed coming up, of course. But that would be what I would be anticipating at this point. UEC's undergoing a bit of an eat the tail sort of trade here, where we've got this big tail here where the market sort of tried to hold up, but, you know, the sellers have come back in with a little bit of volume too. So people look like they're bailing out of UEC a little bit more. So I'm not sure if it's going to come down. I'm not sure how far it's going to come down, but obviously this sort of area and then down towards the 50% line would be the sort of area to see how the market's going to react if we can get down there. So that would take us between, whatever that is, $4.70 and $4.50 area. If it can come down here and just sort of test into this zone to see how it reacts, see if we get a bit more volume coming in, that will be the first point of call. Just looking at the spot EFT, and another pretty clear candles here where we've got the shooting star, the hanging man, and now we've just sort of failed. So once again, I think this gap's going to get filled, and then that would take it right to the 50% line at $42.50 odd. So that would be the point of call for the Sprott ETF. So that's kind of it. It was just sort of short and sweet, but I think the point is that just from an Elliott wave perspective, if we think we've got an impulse going in here like this, like a 3-wave pattern, my anticipation is we'd now start to get wave 4, which would be sort of choppy and sideways, even though making this an impulse is a bit ugly. But it's certainly an impulsive move through this section, even though, you know, yeah, there's overlaps and stuff like that, but putting it together, I just in a general sense, I would just think that after the candles that we've seen with the volume, that we're now just getting ready for a period of sideways chop. So I probably won't do anything for another week or two. I just wanted to run through that quickly and just show you how some of these candles and the volumes associated with them can be good telltale signs that we might have just reached just a short-term peak at the very least. Interestingly here with Cameco, that we got right to the top of this trend channel where we had the shooting star, and now we're just starting to push back away from it. So like I said, I think maybe just a bit more chop. That would be my anticipation only at this stage, is that we would get a little bit more chop like this, and then we would maybe just go up and get another. But my overall views from the last video I did stand. So we'll see how it plays out, but that's where I'm anticipating uranium for the next week or two, I would suggest, unless, of course, the Fed do something tonight which changes the narrative and things pick up again. But we will see tomorrow. All right, best of luck, and thanks for watching. See you next time. Bye.